The seller who is selling to buy a house with her boyfriend in the Dove Mountain area had been suspecting some things and had hired someone to go and follow him and got video of him with another woman yesterday.
Oh no.
So let's just say the night did not end on the note that we had planned, and we shall not be listing nor buying at this time.
Awkward. That's super heavy.
Yeah.
Well, the good thing is they find it now and not.
That's what yeah, that's what we were saying. Like, can you imagine if it was like already under contract or they like bought something and I mean, goodness gracious.
Well, that's why you got to find the right partner or scare the hell out of the other one you have.
Touche.
I want you guys to know that Jess can absolutely hear every word you say and she's taking notes. She's like, I'm not going to hire somebody. I'll watch it myself.
Right?
Yeah, I can't believe that you said 13 miles wasn't enough and you really wanted to do 20.
The beautiful thing is my wife definitely runs our vacations. She has all the plans. We have all the things going on. And she even tells the boys last night, we need to wake up early because we have a big day tomorrow. And I scoff at her because I'm like, your waking up early is not waking up early. I woke you up at 5:45 when I got up, and then you went back to sleep. And then she's like, we got a lot of things to do tomorrow. I was like, or we have a medium-sized day today. We're gonna have fun. And we're gonna do things.
Well, the nice thing about Vegas is time is a construct and it just disappears when you get there.
Yep.
Except for having a standing 8 o'clock call that you've had for the better part of a decade.
Yeah, but that's why you start your day with it and then it just devolves.
Oh, I'm not gonna lie. This is the only thing on my calendar today. Is this in Vegas? And the only reason I'm doing this, I plan on my family being dead asleep right now because most of them don't wake up until 9 or 10. Especially my trash panda Sky. He never gets out of bed, but
50-50. I wake up at like
it's 50-50.
6 or I just like
All right, John, I see that you're in. The shenanigans have happened. You are ready.
How's it going, guys?
I've already told them about the nepotism play here and why that you're invited to this crazy world. So play on it. Use it as leverage.
Indeed.
You know, trust Anthony. Use me.
Right? That is my dad. Happy to be here. Great to meet y'all. My dad is a big fan of Dan. Says a lot of great things about him.
I pay him well for that.
So I'm 30 as of a couple weeks ago, and I've remembered my dad having what used to be a Realty Executives there, obviously now a KW since I can remember. I think that's one of the main reasons we moved to Tucson when I was like 5. But again, great to meet all y'all, and kind of quick pitch, just wanting to get some faces on here, meet some people. Dan was kind enough to invite me to the meeting and pitch some hard money, for lack of a better term. So we have a hard money lending program. We can be very competitive on terms for pretty much your standard hard money lender. So I'm seeing anything from 0.5 and like 9%. Sometimes we're wiping the origination fee all the way up to, it's deal by deal, obviously, but all the way up to like 3 and 13 if it's a really risky deal, first time borrower.
Let's pull back the veil on the jargon for this. This group is talking about how to create better deals and more financing opportunities for their clients. So when you say 0.5 and 9.5, they don't know what you're talking about.
Okay.
Why would someone use hard money?
Apologies for being late.
How could they leverage that in for a buyer, wanting to buy a property that may not be as nice?
Yeah, for sure. So a couple of things, and thank you for that, Dan. Biggest thing is I would say the main pitch is for investors, obviously investor type clients that are looking to expand their portfolio. They want to close on something quickly. Something pops up where they need capital quickly. That's where we really are coming in 95% of the time, 90% of the time. There's some one-off reasons why we could come in, but again, more than anything, it's flexible and it's quick capital. And we can get into the jargon later of what the terms are. But That really is the pitch here. And we also do construction based draws, which again is kind of getting into the jargon, but say there's a real kind of distressed property that's going to need a lot of fixing up, that's going to need a lot of renovation. We can loan on that too. So we can loan on the front end on the purchase, and then we can also do draw. We usually do them in draws. So we don't just give like, say, make it the numbers easy. Say there's $100,000 of construction or renovation needed. We, for the most part, almost always don't just throw that 100,000 down. We do them in draws based on whether it's permits, percent complete, those kind of things. So whether those be given out like 20K, 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 a little more than that, that's what we're seeing. So again, if you have a client that, or clients more than anything, that are looking at investment properties, looking at expanding their portfolio, and they're just having trouble getting a hold of capital, that is exactly where we come in.
So what kind of
Hopefully that makes
down
sense.
payment or qualifications does someone need to be able to get a hard money loan with you guys?
Great question. So there's, and what I can do is send you all, Dan, I'll send you the checklist. It's like pretty much what you would be giving to like a lender. So I'll pull that up actually. I'm not going to share screen, but just pull up some of the basic terms. But to answer the first half of the question, what they need to put down for first time borrowers, we're asking around 15 to 20%. Obviously, the more you put down, the better term, not obviously, but the more they put down, the better interest rate you'll get, or the less of an origination fee you'll get. And then once you're in our portal, once we know we have a relationship with you, the investor is more reliable. We can do up to 100% of the loan amount.
I have
So
multiple questions whenever I,
Yeah,
sorry.
yeah. No, go ahead and dive in because
Jim, don't you laugh at me. So so you said this is primarily for investors. Do you ever see, I guess in that regard, are these mostly used or exclusively used for investment properties? Or are these ever used for primary residences?
great question there. They can definitely be used for a primary residence. We're an asset-based lender, meaning that's what we're taking as the lien. So like we're not lending to someone who's like a first-time home buyer and like taking a lien on like their cars and stuff like that. We're taking a lien usually on like an investor is looking at 123 Main Street. He underwrites it for us, sends it to us, says he needs X amount, and then we're taking a lien on that property. We loan the money, and then which it doesn't happen often, if the investor somehow completely screws that up, walks away, something just goes completely south, then we're taking the investment property back as collateral. We're not like, you'll hear like kind of like, because sometimes hard money lending can get like an interesting reputation because there's multiple different types of it. You can be personal hard money loans, which is like someone that wants to buy a new truck and they're taking liens on like their personal house and stuff like that. This is again more investment type deals that we're taking a lien, or that's our leverage is the actual investment property if they do default or walk away or something happens. Does that make sense?
Yeah. And so because you guys are lending this money, are there, and again, you're going to hear probably some really novice questions
No,
from
you're good.
myself or maybe anybody else, but
It's not intuitive at all. And I'm paying attention. I'm pulling up some of the forms right now.
so if they're using this, they're not, what are they qualifying? I guess, okay, what are the requirements? I have a million questions and I have ADHD, so the brain's like on fire right now.
All good.
If they're borrowing from you guys, what are your requirements compared to somebody using another loan type in terms of types of inspections, minimum standards for like safety, structural things like that, that you would normally see that variation between like conventional FHA, VA, that kind of thing.
Mm-hmm.
Does that make sense?
Yeah, it does. So there's not the most straightforward answer on that because it is, and I know that's not what you want to hear, but it is like property by property, deal by deal. So there's not like for every single deal we see, there's this number, and these are all the requirements. But like, for example, like we're going to need a W-9, list of members, the guarantors, kind of all the standard stuff you would think like that, government issued ID, mailing addresses. And then we're also going to always need some kind of insurance. So whether it's an additionally insured or the mortgagee or the loss payee, coverage for that insurance. Title is another thing we'll always need. We'll need a clean title pool. And Dan, for why use us instead of conventional construction loan? It's speed, it's flexibility, and again, it's one of the big things is we have the contractor networks, we have the construction draws I was talking about earlier. So when there's a lot of renovation needed, which on a lot of fix up properties, obviously there is. When we're lending on that, for example, where a lot of like a bank, for example, for the most part, is not going to see a fix and flip and just lend on the ARV of that. That's not going to be something that you see often.
Yeah. So what he's saying, guys, is they will lend on the after repair value of the property. So all the work
Yeah,
is
sorry,
done.
I'm getting jargony.
It's okay. We got some new agents on the call.
Yeah.
And that's how we learn is, if you're surrounding it, you understand the language, it's okay. But, if you have a house that's been caught on fire or neglected for the last 30 or 40 years, and maybe it's worth $400,000 if all the repairs were done, but there's no buyer on earth that's going to pay $400,000 on it because it needs $150,000 worth of work. That's why you bring it to John and his team and say, hey, I got this opportunity. Here's this house. I think it's worth $400,000 when it's all done. I think I can buy it for 150 grand, put 150 grand into it. I got $100,000 profit. Let's make a deal happen.
Exactly.
What if it's
That's a very
smaller
good
sums
example.
of money than that? Like if it's just a smaller deal?
That's
Like what
completely
if you had a
fine.
novice person? Like if I was like, oh, I have this property that the seller wants to, I'm representing the seller and I'm like, this is a pretty sweet deal for myself. Actually, I can see the value in this if I wanted to put, the pool repair work in, it needs a new roof, this and this and this, but it's just like $50,000 worth of repairs. And then you turn around, like, are you guys looking for certain margins or return or something?
That's a good question, and not necessarily. Like we'll definitely lend on that. It really is deal by deal. Does it make sense or not? So like for that example, if you find a home and you think it only needs $20,000 worth of renovation in it, and it could really bump up the ARV, that's actually something we'd be very interested in because it's not super risky from our side. We don't have to give out a lot of capital on it, and we underwrite it like with you. Obviously, we ask for your estimated value, your after repair value of what you think. We do it on our side too. And again, if it makes sense, like for your example, if you have $150,000 home as is, and you think if you put like a face coat on it, like a new paint, and you fix up something in the pool, and that's like a total of basically like $25,000 reno, that's definitely something we would lend on.
So
Is that what you're asking? Is that I'm answering the right
Yeah,
question?
pretty much. Yeah. Like, is it just like big fish or small fish? Like, I think a lot of us, and we've had conversations like this on this call a lot before and done some like walkthroughs on some of Sam's properties where it's like, well, what if we as like newbie people or not big time investors find an opportunity and we're like, man, I don't have the capital to buy this, but I know the market. I know, is this something that I could start getting into this way?
Most definitely. That's
in
definitely
that in that same example, so how do like the payments work? So you find the house, you buy it for 150, you need 50,000 to put into it. You run all the numbers, you get all the contractors in order. Is it like a monthly payment until everything is finished, or is it like one big balloon payment at the end of it after repairs are done? How does that work?
great question. Again, varies a little bit, and I want to make sure I'm answering the right question. So could you ask it again? Because I think I heard you're asking like how does basically
Like, can
like
you
the
can you
interest
wrap
work?
payments into the draw schedule, or do you pay interest only payments during the term?
Both. That's a good question.
You
Both.
do
So
both.
for example, like when I threw out in the beginning where Dan was kind of like relax on the jargon, was I was throwing out an example of like I'll use like some numbers here. So if there's a home that you can want to buy for 100,000, you think you can put $30,000 of not interest, $30,000 of renovation into it and turn it into a $210,000 home, $220,000 home. We're going to lend on the original purchase amount. That's going to have usually an origination fee, which is a percentage of the actual purchase of our loan to it. And then there's going to be interest on that also, which is pretty normal on, it's not pretty normal, it's normal on all hard money loans. And then on like what you're talking about for the renovation, for example, is it depends. If you only need 10 grand of renovation, we're going to do that probably just wrapped into the first payment. Once it gets starting to be, there's no, again, we don't have like set numbers. So it's not like once it hits 40,000 renovation, that's where it starts to become the construction based draws.
I think Trey is asking when are payments due? So like, let's say you're lending on the house, just basically you're lending on the house and we get the loan from you. We start work, whatever, we close the deal. When are payments due? Or is it all interest bearing? Is it interest or is it just, you know, you have the principal and the interest automatically?
Usually we're doing the origination fee is up front. So if we loan you $100,000 and there's a 1% origination fee, you can do the math on that of what's due right then. And then the interest or the interest payment. So if it's 10%, 9%, that's due at the end. So it's due when you sell the property is how we're operating for the most part.
Okay.
So all the interest and the principal is due at the end.
So you're just paying on the base, you're paying.
And again, so like, yes. And also like when I talk about the construction based draws, again, let's use a larger number to kind of give an example there. If it needs, let's call it $100,000 of renovation, what we're going to do is lend you 20 and then make sure a certain amount of scope of work is done, whether that be done by contractors going in and giving us the A-OK, a permit on it being pulled and being like it's done. Then the next 20,000 comes, and the next 20,000 comes. So that's what I mean by construction based draws. It's like we do it in phases is an easy way to put it.
Yeah, so they're giving you the 100,000. They're just giving it to you in 5 sections. But they want to
Exactly.
they want to make sure work is
Exactly.
progressing before they give you the money, so that you don't take the 100 grand, meet me in Vegas, and double down on black.
Yeah, and I think the
Exactly.
reason, and correct me if I'm wrong, Trey, if this is what you're getting at, is like being in some of us being on the newer side, I feel like it's not common that we have these super savvy investor buyers yet, right? But we might ourselves want to do something like that, or we might have other novice investor clients that we've got that are like, dude, I'd love to get into, into this game in this way. What are my options? And being mindful of what are the monthly carrying charges basically for that person while they're holding the property and working on the property until they see a return on the sale.
Yeah.
It also it's highly more likely that you will run into a property that fits this before you'll find a buyer that fits this. And like we've been talking about last week and many of the Fridays that we've had Sam on, we talk about finding the opportunities. As a listing side or as a real estate agent, you were in the trenches talking to the consumers that are wanting to sell these properties. And oftentimes I want you to think, can I buy this or should I buy this? Is this an opportunity for me? And then partner with people like John and Sam and say, hey, this is an opportunity. I feel like it's an opportunity. That the market's here, the house is here. I mean, it needs some work, but the seller's willing to let it go at a reasonable price because they know it needs work. Ask yourself first, do I want to buy it? Then push it to your spheres. Hey, I got this opportunity. You want to buy it? And then you find a buyer for it.
Yeah, Dan, can we like pre-package? I guess, are there advertising rules around that where we have a property that we've got and we're like, man, this would be perfect for that. Get with like John or Sam and say, can we put together like, kind of like, obviously the person would have to come in and qualify, but this property, if you like, here's a scenario package, right? Like, is it kind of making sense what I'm saying?
Yeah.
And then you plug in the buyer and it's
Yeah,
like,
and
yeah, we've
again-
already
and
got
I-
the lender lined up. We've got some of the vendors lined up. We've already kind of factored in the cost, gotten quotes on a bunch of stuff. Who wants to pull the trigger on this? Like,
For
can we
sure.
do that?
And
I don't see a reason not to. I mean, there are some, fair housing guidelines you have to follow and Alta guidelines for advertising and lending. But as long as all of it's disclosed, your rate, your term, your expectations, and the credit needed, it wouldn't be hard to do so. Now, if you do one-to-one and you got this packet saying, hey, here's the property, I've already got a loan solution figured out. All you need to do is call John, and then you don't even need all that other stuff. It's kind of strange that you can get away with
Yeah.
it one-to-one.
Yeah, I guess I'm just thinking about it like Banff, Dan, where it's like, I put things in most of my listings, right? Where it's like, here's the features and upgrades. And sometimes we partner with lenders where it's like, if you use this lender, you could get that they're offering this kind of buy down or whatever. For a property like Banff, which Dan knows really well, could I also have like essentially I'm marketing to, which has been the case with this property. I've had a combination of both investment buyers want to snap it up and then regular mortgage folks that are going to use it as a primary residence. Could I have this like one pager PDF in there that's like, you know, kind of got this thing put together where it's like, this
Yeah.
is the estimated ballpark if you did this, this, and this, and sort of figure that stuff out ahead of time.
It's definitely an opportunity. I mean, I love the way you're thinking about this. It's a great way to everyone to think about it is how can I market this property to a bigger pool of buyers? And oftentimes houses that don't qualify for normal conventional financing, whether it be FHA, VA, USDA, or a conventional loan, you need a person like John if the house is super ugly and needs some stuff. And that actually opens up the buyer pool for your sellers where you might be able to go and get someone who has the 10 or 20 or 15 or whatever percent down they need for the loan. That's not an investor, that would be an end user. And then they can finish out the house themselves. There are buyers out there to do so. So as you're thinking that, I love it. It creates the opportunity. I'll ask John to throw his contact information in the chat as we're, wrapping up the last bit of our 30 minutes here. Was this worth your time, guys? Was this valuable?
Heck yeah.
Yeah, thank you.
John, nice meeting you, bro.
yeah, it's great to meet y'all. And I think I misheard. I was just thinking about what I had answered when you had asked about kind of how, and this is getting into the weeds a little bit, but one, it's great to meet y'all. Happy to be on the call. Two, for what you were asking about, like, for example, how do the loan terms work? There, again, I keep saying, like, it sounds like I'm beating around the bush, but it's so deal to deal that I can't just give you like it's always due at this percent at this date. But we do a couple different things. There are some same day methods. So we do, if you close on the 10th, there's interest payments on the 10th of each month due. We do fixed day once in a while. I'll see that. So
I think the more
it's like-
beautiful thing about hard money lending, even though we call it hard money, it's easier to get.
yes,
It's just your rates are higher and it's harder to pay. No,
And they break your legs if you don't pay.
yeah,
Got
they
it.
make like
Understood.
no, but what it
Yeah,
is,
collected.
it's a lot more flexible, and that's the thing is I think it creates an era of flexibility, and if we give people options and we give them flexibility, you can make a lot more deals happen. So, John, I want to say thank you. Sam, if you didn't notice, was our lender. Sam might be the only one on the call that understood all the bit of the jargon on here. So, and I know that Sam does need the resources that you provide. So,
Yeah, John, I sent you
Awesome.
my number. There we go.
yeah, I just got it. I'm gonna text you right now. It's great to meet y'all. Great to meet
oh
you,
yeah,
Sam.
take
Yeah,
the time,
likewise.
take John's information down, put it in your phone. As a hard money guy, you're gonna need one at some point in your career. Someone's gonna ask, hey, I want to buy this house. How do I do it? I want you to think, if it's hard to get a normal loan, that's where you need a hard money guy or girl.
Very true.
Not that I've ever met one, but I'm sure there's one out there.
4 easy examples I'm seeing a lot to wrap up. Obviously, the investor purpose we talked about, fix and flips, bridge loans. I think you'll probably know what a bridge loan is, and then cash out refinancing. Those are the 4 we're seeing most often. And another simple example is which is an example of one of these, but someone owns a home. They have another home they want to buy, and they need to close quickly, and they can't sell their home to get the capital in time to buy the new home. That's where we come in as for the non-investor example of a good amount.
There you go. Cross collateralization, bridge loans,
Bridge loans, exactly.
portfolio loans, lots of cool stuff. All right. Any other pending questions or any lingering questions that are striked? And if you guys come up with some stuff, let me know. You can put it in our group chat, and I will get it to John, or you can take his contact information and get it to him yourself.
Yeah, and everyone's more than welcome to reach out. I welcome the business. More than welcome the business.
Thank you for being
Of
here.
course. Thank you all. Yeah, thank you for
He
having
got
me.
trained
Thank
on
you, Dan.
AI last week, so I know he's got a
Thank you,
little
John.
time on his calendar.
Indeed.
All right.
Dan's
All right,
helping me with AI a ton. I'm using it like a 5-year-old right now. I'm trying to use it like a 30-year-old.
Oh,
Hey
good.
John,
Welcome to the team.
on your end, do you guys do a lot of research into the property to see if it'll be like a good investment on your end, or are you kind of just
Yeah.
taking the word of the person buying it?
Yeah, I can be very we'll always be transparent. We're always doing due diligence on our side.
Gotcha.
I mean, there's probably a handful, not probably, there's a handful of investors that it's their 50th deal with us kind of thing. We're not diving deep into like what is every tit and tat of that property.
Yeah.
We're just looking at a quick overview, but especially for like a first time investor, someone that's not super qualified, quote unquote, on paper, we're not the FBI, obviously, but we're taking a pretty deep dive and just making sure the deal makes sense for both of us, because we don't want the deal to fail. Like that's a big like difference between like a kind of like a credit card chaser and us, is like we don't want to be in default. We don't want it not to work. It's much easier and better for both parties if it works. So that's like one of the biggest reasons we do a lot of due diligence on our side, is because yeah, we could give out money at a high percent, but trying to chase down the property, having a default on it, I mean, it's bad business, and that's one of the big reasons we do take a deep dive on our side too.
John, do you guys ever buy? Oh, sorry. Go ahead, Trey.
No, I was hoping you guys did, because if I found a property and you're like, no, that's stupid, I'd rather that. So
Yeah.
that works.
For sure. We definitely say no. We
Do
definitely
you
are
guys
happy to
buy
say no
properties,
about
John?
it. Yes,
Not
we
just
do.
lend?
We are cash buyers on the right properties. So obviously we're an investment firm, so it has to make sense for us, obviously, to make pretty quick profit on it, but we're happy to take a look at any deal.
And this is not isolated Arizona. When I was on the phone with him, he was
Yeah.
working on deals in Denver and Kansas and Minnesota and Montana and
Montana. That's what I've been spending my whole morning on, is Montana.
So he's in Texas, aren't you? You're in Texas.
Yeah, I'm in Austin, Texas. I still have the 520 number, still repping. Grew up in Tucson for a long time, went to South Point for 1 year, and then I moved to Austin when I was 15.
So
I still got my my 512 number, John. I'm from Austin.
Awesome. What part of Austin?
I grew up mostly in Pflugerville.
Yeah, it's about like 30 minutes from where I'm at.
Yeah, went to Pflugerville High School and in Round Rock as well.
Yeah, very familiar with the area.
Pflugerville. That sounds fake.
Pflugerville.
That sounds made up.
It does sound made up.
That sounds made up. I've seen
Funny small world. I met a girl named Katie Pfluger, and I made a joke. I was like, oh, like Pflugerville, and she was like, yeah, it's my grandpa. I was like, oh.
And Dan, try to spell Pflugerville.
Don't do it, Dan. Don't do it.
I'm gonna tell you right now, it starts with a P.
I feel like I'm gonna get canceled for doing it.
It's silent.
So, all right, guys. Well, have a fantastic weekend. Jump on out of here. Go do some great things.
Thank
John,
you.
thank you again for your time.
Thank y'all.